What is happening, crypto fam? Welcome back to Bitcoin Bulletin, your ultimate source for the hottest, most explosive news in the digital asset space. The market is moving faster than a rocket launch, and if you're not plugged in, you're missing out on the action. Today, we've got a triple threat of game-changing updates that you absolutely need to hear. Get ready, because we're diving deep into the seismic shifts that could redefine your portfolio and the future of finance. First up is the big money moving. We're talking about institutional inflows and a potential rotation that could shake up the entire bull case. Is the focus shifting away from Bitcoin? We've got the inside scoop on where the smart money is flowing, and it might surprise you. Then, we're zeroing in on a groundbreaking project aiming to merge the strengths of two blockchain giants. Think Bitcoin's security meets Ethereum's smart contract power in one revolutionary ecosystem. They're launching a massive airdrop and pre-sale with some seriously big names backing it. You won't want to miss the details on this one. And for our third major story, we're looking at a bold corporate move that's doubling down on Bitcoin. This company isn't just holding, they're strategically accumulating, and it's sending shockwaves through their stock price. Is this the blueprint for future corporate treasury strategies? We break down their aggressive approach and what it means for the market. Finally, we're seeing a clear signal of investor sentiment moving, with Bitcoin facing leverage risks while Ethereum hits new highs. What does this divergence mean for the short and long term? We're breaking down the charts, the data, and the expert analysis. Don't blink, don't breathe, just get ready for the Bitcoin Bulletin. Make sure you're subscribed and hit that notification bell so you never miss an update. Is the bull case shifting? Institutions eye Ethereum amidst Bitcoin rotation. We're seeing a fascinating trend emerge in the digital asset space as institutional capital appears to be exploring new horizons, potentially signaling a shift in the long-term investment narrative. While Bitcoin has long been the undisputed king, recent data suggests that significant institutional inflows might be increasingly directed towards Ethereum. This development raises a critical question. Is the primary driver of the next major bull run in cryptocurrencies beginning to pivot away from Bitcoin and towards its closest rival? The implications of such a rotation are profound. If major financial players, hedge funds, and asset managers continue to allocate capital to Ethereum, it could not only boost Ether's price, but also fundamentally alter the market's perception of its utility and value proposition. Ethereum, with its vast ecosystem of decentralized applications, DeFi protocols, NFTs, and growing institutional adoption for staking and other financial products, presents a compelling case for diversification and future growth. The network's ongoing upgrades, like the transition to proof-of-stake and future scaling solutions, are designed to enhance its efficiency and transaction capabilities, making it a more attractive platform for large-scale financial operations. Conversely, Bitcoin, while still the benchmark digital asset and often seen as a digital gold or store of value, may be facing a period where its narrative as the sole growth engine of the crypto market is being challenged. The increasing leverage in Bitcoin's derivatives market, as highlighted by surging open interest in perpetual futures, has also attracted attention. While high leverage can fuel rapid price increases, it also introduces significant liquidation risks, creating volatility that some institutional investors might seek to avoid in favor of more stable or diverse assets. The recent outflows from Bitcoin ETFs further underscore this potential sentiment shift, suggesting that some investors are reevaluating their exposure and looking for alternative opportunities within the digital asset class. This dynamic is playing out against a backdrop of broader market movements, including significant activity in the AI sector, exemplified by NVIDIA's robust earnings. While seemingly unrelated, the capital flows and investor sentiment in these different markets can influence each other. As capital seeks the highest returns and best risk-adjusted opportunities, the competition between different asset classes and within the crypto space itself becomes more intense. The question remains whether this is a temporary reallocation or the beginning of a sustained trend that could redefine the dominance hierarchy within the cryptocurrency ecosystem. But is this just about institutional money? We're also seeing innovative projects aiming to bridge the gap between these two titans. Stay tuned as we explore a new network looking to unite Bitcoin and Ethereum. Bridging the giants, Hemi Network's $30 million push to unite Bitcoin and Ethereum. A groundbreaking new project, Hemi Network, is making waves with its ambitious vision to create a unified blockchain ecosystem that seamlessly integrates the core strengths of both Bitcoin and Ethereum. With a substantial $30 million in funding already secured from prominent investors like Izzy Labs, formerly Binance Labs, Republic Digital, and Hyperchain Capital, Hemi Network is positioning itself as a super network designed to scale Bitcoin beyond its current monetary use case by incorporating Ethereum-style smart contract capabilities. The network plans to launch its Genesis airdrop and pre-sale event in late May 2025. A total of 10 billion HEMI tokens will be distributed, with 10% allocated to a community airdrop, targeting up to 1 million addresses. Each participant in the initial phase will receive 100 HEMI tokens, with additional rewards available through an invitation system. Concurrently, a pre-sale will offer 2.5 billion HEMI tokens, priced at 1 ETH for 200,000 HEMI, with minimum and maximum purchase limits to ensure broad participation. The project has detailed a clear tokenomic structure, allocating 32% for community and ecosystem development and implementing 36-month vesting periods for team and investor tokens to ensure long-term commitment. Hemi Network's core innovation lies in its ability to function as a programmable Bitcoin chain, aiming to leverage Bitcoin's robust security while enabling the complex smart contract functionalities characteristic of the Ethereum network. This dual capability is intended to unlock new use cases for Bitcoin, moving beyond simple peer-to-peer transactions into areas like decentralized finance, DeFi, advanced dApps, and more. The project's roadmap includes the development of mobile applications, a dedicated DeFi wallet, and a cross-blockchain exchange by the end of 2025, all focused on providing low-fee infrastructure and unifying the fragmented blockchain landscape. The significant funding round, which brings Hemi Network's total capital to $30 million, underscores strong confidence from the venture capital community. The backing by major players in the crypto space suggests a belief in the project's potential to address a key challenge in the blockchain industry: interoperability and the expansion of Bitcoin's utility. With an estimated launch price of 5 cents, analysts project a potential long-term value of $1 or more, driven by adoption and staking incentives. The project's strategic partnerships, including one with Binance Alpha for its airdrop campaign, further solidify its market entry strategy. This fusion of Bitcoin's security and Ethereum's programmability is certainly ambitious. But what happens when a traditional company goes all in on Bitcoin? We're about to find out next. DDC Enterprise doubles down, an 888 BTC bet fueling triple-digit stock gains. In a bold move that underscores the growing acceptance of Bitcoin as a corporate treasury asset, DDC Enterprise Limited has significantly expanded its holdings, doubling its Bitcoin reserves to an impressive 888 BTC. This aggressive accumulation strategy, executed throughout August 2025, has not only bolstered the company's digital asset portfolio, but has also coincided with a remarkable surge in its stock price, which has climbed by over 8.9% to $13.88. This latest acquisition marks the fourth purchase of Bitcoin by DDC Enterprise in August alone, demonstrating a clear and consistent conviction in the cryptocurrency's long-term value proposition. Company CEO Norma Chu highlighted the disciplined approach behind these strategic acquisitions, stating, "Doubling our BTC holdings in a matter of weeks despite Bitcoin market volatility demonstrates our commitment to being a leading Bitcoin treasury company." The success of this strategy is further evidenced by the substantial yield generated on their Bitcoin holdings, which has reportedly risen by an astounding 1,572% since their initial purchase in May. This aggressive accumulation has translated directly into shareholder value, with the company's stock price more than tripling since the beginning of the year, and each 1,000 DDC shares now representing approximately 0.106853 BTC, offering investors direct exposure to Bitcoin's price movements. DDC Enterprise operates with a unique dual identity, functioning both as a dedicated Bitcoin treasury and a prominent global Asian food platform. This synergistic approach allows the company to integrate digital assets as a strategic hedge and growth instrument while simultaneously expanding its portfolio of well-known culinary brands, including Day Day Cook, Nane Lim, and Yai's Thai. While DDC's Bitcoin holdings might not be the largest in the corporate world, the sheer pace and scale of its accumulation have firmly established it as a significant player in the burgeoning trend of corporate crypto adoption. Despite the overwhelmingly positive market reaction and strategic execution, the company's official communications include standard cautionary language regarding the inherent risks associated with forward-looking statements and the volatile nature of the cryptocurrency market. However, the consistent doubling of its Bitcoin reserves and the corresponding stock performance strongly suggest an unwavering confidence in Bitcoin's future as a core reserve asset. DDC's strategy serves as a compelling case study for other public companies considering similar treasury diversification, highlighting the potential rewards of disciplined, conviction-driven accumulation in a rapidly evolving financial landscape. While one company is aggressively buying Bitcoin, the broader market is showing a fascinating split, with investors seemingly rotating towards Ethereum. Let's dive into why. Bitcoin faces leverage risks as investors pivot to Ethereum's record highs. The cryptocurrency market is experiencing a significant shift in sentiment, with Bitcoin's price dipping below $111,000, while Ethereum continues its impressive ascent, recently hitting a record high of $4,956. This divergence is being fueled by a notable rotation of capital, exemplified by a substantial whale moving approximately 22,400 BTC into Ethereum via the decentralized exchange hyperunit. This move, coupled with an alarming surge in leverage within Bitcoin's derivatives market, is raising concerns about potential downside risks for the leading cryptocurrency. Bitcoin's perpetual futures open interest has climbed to a staggering 310,000 BTC, valued at around $34 billion. This high level of leveraged long positions indicates a market heavily betting on continued price appreciation, but it also creates a precarious situation where a slight downturn could trigger cascading liquidations, amplifying any price decline. In stark contrast, Ethereum has demonstrated remarkable resilience and growth, rallying over 200% from its April lows, significantly outperforming Bitcoin's more modest 45% increase in the same period. Analysts attribute this outperformance to increasing institutional adoption, corporate treasury allocations, and robust inflows into Ethereum-based investment products. The broader market context further highlights this trend. While the AI sector continues its boom, with NVIDIA reporting exceptional Q2 fiscal 2026 revenue of $46.7 billion, up 56% year-over-year, and expanding its share repurchase program, the cryptocurrency market is showing signs of reallocation. Bitcoin ETFs, for instance, experienced over $1 billion in outflows last week, marking their worst performance since March. This outflow trend, combined with the Ethereum/Bitcoin (ETH/BTC) ratio reaching a new high of 0.04, strongly suggests a structural shift favoring Ethereum and its ecosystem. The market is keenly watching how these macro trends and specific asset dynamics will play out in the coming weeks. Federal Reserve Chair Jerome Powell's recent dovish remarks initially provided a boost to crypto prices, but the market has since pulled back as investors reassess risk appetite. Bitcoin's current vulnerability to leverage unwinding and potential demand weakness positions it for possible consolidation or correction. Meanwhile, Ethereum's momentum, driven by strong institutional and corporate demand, appears to be building. This period of market recalibration suggests that while Bitcoin faces headwinds from elevated leverage, Ethereum is capitalizing on its growing utility and adoption, setting the stage for a potentially dynamic period in the crypto market. So we've seen institutional shifts, innovative new projects, corporate big bets, and market rotations. It's been a wild ride. All right, that's a wrap on another action-packed Bitcoin bulletin. We saw institutional money potentially rotating towards Ethereum, a new network aiming to merge Bitcoin and Ethereum ecosystems, a company doubling its Bitcoin holdings and boosting its stock, and a clear market shift with Bitcoin facing leverage risks while Ethereum hits new highs. Don't miss out on any of these critical updates. Make sure to smash that like button, subscribe to the channel for more in-depth crypto analysis, and hit that notification bell so you're always the first to know. Follow us on all social platforms for real-time updates and join the conversation in the comments below. We'll see you in the next one.